Good morning, people. 9:55. I'm gonna go straight into it. A beautiful Asian inventory long. Just to put it out there yesterday, yeah. New York Discovery Probe 1. Price acceptance follows, and then the risk transfer happens. Okay, overnight. Now, I got initially stopped out over here. Okay, however, I got myself involved from this exact level. Okay, 4,353. Okay, 4,353, and then the volatility pushed into 4,100. So let me just get right into it, right? I got stopped at break even on few allocated risk orders on my way up, and then the pullback happened. I got involved again. Now this move, when I got involved from the 4,380s, I held it up until 4,460s. Okay, and then the shallow push to the downside revealed itself. Let's go back to the importance of understanding the CME. Let me pull this over here for us. The importance of understanding the volatility index over here is extremely crucial. Don't get me wrong, when you start to understand the volatility index over here, my friends, it's going to be a game changer for you, because look at this, yeah. Anything above the 40s for the CVOL index, yeah, what exactly happens is that gold starts to become erratic. Okay, gold pip range session to session will increase from, let's say, London yesterday, 400 to 1,000, and you can measure that by reading volatility index over here. Makes sense, yeah. And if you look at yesterday's, I suggest that you divide the CVOL into sessions. So 1, 2, 3. This is in Eastern time, by the way, just to put it out there. So if you're going to be following my session timings, it's going to be 10 a.m, 4 p.m. No, excuse me. Let me just cross check this. Have a template somewhere, but anyways, nevertheless, Eastern time is -4 hours. So what you need to do essentially is just add 4 hours onto the CVOL, and then split the volatility index, measure the volatility index across 3 sessions, and then what happens is you have a solid volatility tracker. Makes sense, If we look at Asia, for example, here, look, Asia's volatility rose from the 40 handles to the 45. What does that tell us? That simply tells us that right now we are sitting at 43s, yeah. And if you summarize all of this, look at this: the move from Asia high to Asia, mid range, 479 pips, and that was rapid. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 8 candles, 400. Primarily, each candle was equivalent to 50 pips, so and so. Okay, I need to mark out Asia low and Asia high, and then the reference point for London to run into once delta is printed. We need to identify the conditions that we need to trade around, especially when it comes down to the footprint charts. I need to refresh this also. Okay, so ooh. Alright, it's still loading up anyways, nevertheless. I think the TP was also loading up. So regards to that, let's leave that for let's leave that to the side for a second. I want you to understand something right now, okay? It's 10 o'clock. London Bullion Market Association opens at 9 o'clock. Okay. London over opens up at 8 o'clock. There you go. Now, on the weekly time frame, yeah, gold needs to close above 4,500s. Yeah, there isn't any weekly delta, so that means it's gonna step away from wherever current market price is playing around. It's gonna step away from these levels. Okay. Yesterday's London low was an extreme strong London low. We had an aggressive push. Okay, that was the only way to surpass this London low, and then price literally retracted back above London low. If you can understand the fact that London low was a level that was protecting NY, but it had to get split broken because the discovery on behalf of London was still pending. Okay, so that discovery had to forcefully be printed to the downside. And if you understand the discovery phase, when market needs to reprice itself for a specific reason, you will do extremely well in the markets when it comes down to, what is this push telling me? Shall I allocate exposures? Okay, breach 1 and breach 2. Okay, breach 2, 1.27 stab, push back above. You know, Asia push back above. Asia runs into NY's second breach over here. Yeah, excess candle, push. Okay, yesterday NY's upside breaches were pending, and I did mention this yesterday as well. I said, look, friends, we have upside breach 1 and breach 2 pending. Okay, so price discovery, it's still pending to the upside. Okay, and we've also had yesterday's London Delta over here. Makes sense, you know. So with that being said, yesterday's London Delta discovery was pending. NY fulfilled it. Now look at this. London returns back into that Delta area. 4425 is extremely valuable. I would say key level for anyone that is keeping an eye on gold. 4425 is a key level. 4411 is a key level. I would keep an eye on 4411. Okay, because if you look at this year, breach, stay below, back above, retest, push. Very simple price action. There's simple, but there's a lot that goes behind when it comes down to understanding a move like this. And I recommend that you track the CVO in a nutshell. Go do your research, go create an account with CME, track the volatility index. It will benefit you in all areas, okay, especially when it comes down to reading market conditions, being able to understand why a specific session is going into discovery, or, you know, if you, I think most of you will call it a expansion phase, right? Yeah, why is price going into expansion phase? Okay, which is primarily discovery, where the market needs to, you know, reprice the auction levels in order to attract more buyers and more sellers, in a nutshell. Okay, without that happening, it's almost impossible for the market to move. Now today's Friday, we don't have any fundamentals lined up for today. The discovery is to the upside for NY. Okay, so I'm just waiting for London to position itself, and once the footprint charts load up, what I'll do is I will then track. I'm still waiting for the footprint charts to load up, and then I would just simply dive into identifying where the delta candle / location marker is placed. Now the delta location marker is crucial because it tells you exactly where a specific amount of liquidity is placed at. Okay, so the overall session liquidity is calculated by that one candle. Okay, and that becomes a location marker. So then price needs to revisit. For example, here, okay, 1045 is the location marker. This candle here, specifically speaking, is a liquidity candle. It tells you exactly that the overall London session, yeah, has picked up whatever it needs to pick up, and we have that specific liquidation available in order for the move to happen. Okay, even yesterday's liquidation candle was here, 1530. Okay, we had buy side liquidity. What does that tell us? We have buy side liquidity. What does that tell us? It tells us that we can run into buy side stops. Makes sense? Yeah, we have buy side liquidity over here at this candle. Push. It wiped out all the buyers. Okay, and then guess what happened? Okay, because we had sell side liquidity at 1945. Makes sense? You have to really understand buy side liquidity, sell side liquidity, delta location marker, based off the footprint charts, based off the overall gold futures exchange centralized book, rather than just a random candle, you know. And if I show you some of the case studies as posted on a daily basis, it's over here. Sell side liquidity available, and I'll tell you exactly which candle to look at. Okay, delta footprint identified, 1515 first low, boom, price must revisit the delta zone. There you go. The reason why I'm slightly going a bit speedy over here, because I want to keep this video recording under 10 minutes, so I don't really go off the board. But yeah, that's that in a nutshell. I wanted to give you all an update. And apart from that, what I'll do is I'll just continue doing some of the beautiful recordings that I do on a daily basis, but in a slow, steady manner. Okay, this was a quick rundown for all of you. 10 minutes. Take it however you want to take it. But yeah, that's that in a nutshell.